Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is the 9th. I think we've got some fun stuff to talk about today. What's with the NASDAQ today going red? Well, I mean, it's not really red, but let's go and look at the charts and I'll show you what's going on here. E-mini. Okay, so here on the E-mini yesterday, pretty quiet Monday, really. Could see it from the open. That's why I kind of was not, I brought my risk in a little bit. I took smaller scalps. I think I lost $5 overall. Kind of a scratchy day. So then at the close, this monster just totally blows out here. Now, here's the problem. There is a lot of gamma at 3,900, so we are kind of stuck in a vortex right now. You're going to see a decent amount of volume trade in this area simply because they have no choice. And yeah, we're going to want to pay attention to what the equities, what the futures are doing there to see if there's actually liquidity at that spot or not, because I suspect that there may be some issues there. Anyways, this ramp up at the close was really, really odd. I'm not quite sure what the deal is with that. But because of that, now in the overnight session, you're seeing it just kind of gently come back down. And so that's where you're going to see, the NQ down just a little bit, just like the rest of them. Treasuries saw a pretty aggressive down move yesterday and now coming back. But when we look at like the spreads, 2 and 10s, 30s, getting like some major flattening going on. There's some weird stuff going on in the treasuries. Now, when we come and look at the commodities complex, oil did pretty good yesterday, but is trailing off. Gold did really well yesterday. Okay, silver did really well yesterday and is doing pretty good today, although it's paring some of its gains. Copper is doing amazing. So like here's what am I seeing? What are we seeing here? I think it's pretty clear. The dollar is getting weaker and we're seeing inflation. It's really simple. And I mean, it's really, really simple. We're getting, the market is preparing itself for inflation. This doesn't mean necessarily that it's like guaranteed per se. Should be careful with that. Oh, where did I put my dollar? Did I just close it? Oh, there we go. Bum-ba-dum-ba-dum. Oh, you know what else? I also don't have the stocks. Let's pull up the stocks. Very bad call on Bitcoin. Well, I don't know if I made a call on Bitcoin. Let me say this in case anybody thinks that I've made a call on Bitcoin. Every metric and thing that I look at says that Bitcoin is overvalued, but I would not touch this thing right now. My opinion right now, I had a short from way back like 2 weeks ago, and that short is basically, I just consider it a loss at this point. It looks to me like Elon Musk has successfully short-circuited what was almost certain to be a complete collapse in Bitcoin. And how far it can go from here now, I don't know, because we are very much in like unknown territory. Okay, maybe, oh, we didn't turn the robots on, thank you. Okay. We are like in unprecedented, crazy speculative territory in Bitcoin, and I would not recommend touching that market. Certainly not trying to short it. There's probably a short somewhere around here that's really good, but you're probably going to get blown out before you find it. It's just what's going on in Bitcoin is insane. And I really truly mean like insane, because here you have Elon Musk has purchased some Bitcoin with capital from Tesla. And now everybody's saying Apple should buy Bitcoin. Everybody should buy Bitcoin. And now are you going to see companies buy Bitcoin? That is scary to me. That is scary to me. What happens to the economy when the inevitable 80-90% drop in Bitcoin comes? Seems like a systemic risk. Seems to me like maybe the government would have a problem with companies buying so much of this security that is basically unregulated because they don't consider it a security right now. Like, why 80%? When Bitcoin tends to crash, it almost always drops 80%. And we have quite a bit of historical data that shows that when we reach this level of speculation in the market, and that is to mean that the price is this many multiples above what true value is as calculated by my Bitcoin valuation indicator, we have always had a crash in the past. And this has successfully predicted every crash in the past. And I think that under normal circumstances, without Elon Musk tweeting out there, that we would have already done it, probably. But here's the thing, you can't necessarily predict the speculative aspect of things all the time. I mean, sometimes you can, but what's going to happen next? I don't know. So there's no stop to it. We'll just see what it does. But it's not a market that I want to be involved in. I've seen this many times before. You know, I was reading one of the books that somebody recommended to me in a private message. And they were doing an empirical study on whether they could basically use the swing indicator to predict early when a volatility regime was coming in. Oh yeah, we need to change the date. Thanks. So they found that they could successfully detect the regimes with that information. So what they did is they took a couple of algorithms that they had, and they said, okay, we'll have this algorithm, and for one, we'll modify it so that when the volatility regime comes along, it just doesn't trade. And then for the other one, we'll modify it so that when the volatility regime comes along, it just tries to take trending trades. And then we'll do a third one that is just like the way that it was before, right? And what did they find in this empirical study? That when the volatility regime came along, that switching the strategy didn't work, that it was just better for the robot to not trade. And that lines up with my own experience. And so you will notice that when a certain amount of volatility comes along, I always switch it over to sim, because I know that there's just no benefit to trying to trade it. What do you think about Ariana Grande? Why would you ask me that? You know, my kids watched the Disney show that she was on before she became famous, and she is so annoying in that show because she talks with like a high-pitched voice the whole time. It's ridiculous. So it's so funny. Now, anyways, like this is the thing, and here's what I want to talk about today is like, you can look at empirical evidence, and that doesn't necessarily mean that the market has to continue to behave in the way that the empirical evidence says that it's behaved in the past. It just doesn't. I think we're in for trouble if the Bitcoin valuation indicator is completely useless now. But my gut is that you were about to have a crash. You had a billionaire come in and pump it up. You'll get a wave of speculation off of that, and then it'll probably trail off. Now, how large is that wave of speculation going to be? Well, if other companies start getting in, and like this whole thing about Apple should get in is absolutely... Have you seen this? Oh my gosh. So Zero Hedge is the big one that I think was pushing this story. But they're pushing this story. Will Apple be the next ones to buy Bitcoin? And there was this analyst out there that said, oh, Apple should make a wallet, and then they should buy Bitcoin that allows people to spend that wallet, and then it would be worth $100 billion a year, so all of this sort of stuff, right? Okay, there is absolutely no evidence or rumor or source or anything that states that Apple is even looking at any of these things. Is just an analyst who I've never heard of before suggesting that maybe it would be a good idea. And now all of a sudden everybody's saying maybe Apple will buy it. We gotta buy it because Apple's gonna buy it, and then Apple's gonna buy it, then everybody else is gonna buy it. We have to buy it all fast now. It's just absolutely ridiculous. This is a speculative bubble at its craziest. Well, probably it's not to its craziest because I still don't see people posting about it on Facebook. But it's coming soon, I'm sure. It's coming soon, I'm sure. Okay, hold on. S2FX, I haven't seen that, or I haven't heard of that before. Maybe I have. Let's search for it. Bum 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 ba-dum bum ba-dum. Yeah, my model actually implements some of this. It does actually include some of this. But I don't think that this doesn't look like it is actually able to measure the speculation involved. So, how to make $30 every day? Yeah, go get a job. I mean, you can make money day trading, but it's extremely unlikely. Just understand. No more GameStop? Oh, there's still going to be GameStop, Blunt. Because today we get the short interest numbers, right? Wait, when did that get released? When does that get released? When do short interest numbers get released? FINRA, short interest reporting. FINRA requires firms to report short interest positions in all customer and proprietary accounts and all equity securities twice a month. All short interest positions must be reported by 6 p.m. Eastern Time on the second business day after the reporting settlement date designated by FINRA. And then there are due dates and exchange receipt date? No, because today is the February. So there was the February 2nd, right? That was they had to report the ones that were settled on 29. February 2nd through 6th. Exchange receipt date, February 9th. Okay, that's correct. But then at what time did they release that information? Doesn't say. Do you know? Maybe it's at 6 p.m.? Here's a release schedule, but again, what time of day? Amazing that the short interest numbers are so hugely important to everyone, but no one can figure out when they release. Yeah. That's exactly what I've been thinking the past few days, because I've asked on Reddit and they didn't know. Yep, I see from the interest publication schedule, the due date is 6 p.m. That's when they have to post. Oh, okay, wait, hold on. Short interest data is released on a mid-month and end-of-month settlement dates and released after 4 p.m. Eastern time on the dissemination date. There you go. So after the market closes, essentially. Or no, actually, yeah, after when the market closes. Okay. So after market close. Is bot trading reliable? So it depends on what your definition of reliable is. So here's the thing, is you can go in and you can find an inefficiency in the market and you can take advantage of it. And it may be possible that edge, other people catch on to it, and the edge gets completely eliminated, and then you don't make money on it anymore, right? So, like, the market changes. So I would never look at something and consider it to be like it'll work forever, okay? This idea that there's like a holy grail and you can go and you can find a trade and it'll just always work doesn't exist. I mean, can I leave it without supervision? Yeah, sure, I think you could. If it's a good algorithm. The shorts were monetized by derivatives. You'll never truly know what the short interest number is, no matter what you're told as a result. Well, I think that the Reddit people understand that there can be shorts from derivatives too, but I think that they're more interested in the actual short shares that have been borrowed number is what they're interested in. So and the key question is going to be, how do they match what the S3 numbers were? And like that's straight up it. Like that's all there is to it, basically. Just do those numbers match up? And if they match up with the S3 numbers, they show a decline of 40 million shares short, then GameStop is just gonna tumble. Like I could see this kind of going sideways today. Let's see here. Let's zoom this out a little bit. I don't want just today. I want like 5 days. Okay. So it's actually down a little bit in the overmarket. So I could see them just kind of treading water today, maybe closing between 50 and 60. And then those numbers coming out and being bad and proving Reddit wrong, and then it opening up tomorrow at like 10. Like that's if that number is bad, like that number is all that matters now at this point, right? And if that number comes out and it's 10, which at this point is what I believe is going to happen, yeah, it's going to be ugly. I get what you mean, totally. Anyways, and if it comes out that it is true, then we're gonna have a video. I'm gonna watch the numbers, and maybe I'll have a video out tomorrow. Because there is a long list of things that I have seen retail traders say about GameStop that is just objectively untrue. Sell calls, no. You have any idea how expensive those are got to be right now? Holy crap. Okay, GME. Well, first of all, I would never expose myself to unlimited risk like that by selling calls. Because if the number comes out and it still shows that there's like 60 million shares, which I don't think is going to happen, but it's possible. And if it comes out like that, like, holy crap. Okay, yeah. You could sell 22.90, but like that's I don't even know if my broker would let me do that. Can you buy puts at the money for $2,500 essentially? Go for it, bro, but not for me. That's not a trade for me. But believe it or not, you can have an opinion about what a particular security is going to do and not trade it. It not be a good idea to trade it, right? So now that kind of gets me into the thing that I was going to talk about though, which is like, okay, so I come in, I've been doing this for 4 years. It's kind of funny because when I started doing the YouTube thing, nobody wanted to do this. Like literally there was a contest where you won a free copy of NinjaTrader 8. Over $1,000 value for this contest, right? To do something, just make a YouTube channel. Nobody wanted to do it, except for me. Now everybody wants to have a YouTube channel. So look at these people with YouTube channels promoting themselves. And the other day, I saw somebody was making a particular claim. So it's this fun claim that we talk about all the time, which is, should you incorporate news into your trading? And I say, yes, you do. The professionals, they use news. And if you use news and you understand what's going on in the news, you have a distinct advantage over everybody that doesn't. Because those other people that don't follow the news, essentially what they're doing is they're just following you, the people that do follow the news. You think that maybe being able to buy it first because you see the news story is an advantage. Yeah, it is. Because you buy first, right? You will get into the stock before they do. So I go and I point out all of this information about if you go to a firm, these are the tools that they use, and this is how they incorporate news into it. I would consider that to be empirical evidence that you should use news in your trading. Okay. I've also shown that you can make money from trading news. I'm not sure that I could prove to you that you're always going to make money from trading news, but my largest wins have been off of news. Okay. And generally speaking, I'm able to, you know, you have a stop. I've never had a stop hit on news where the slippage was so ridiculous that it would overcome what you make on news. Usually when I go through and I have a bad trade, it's because of taking a bad trade over and over again, and often like noise trades. So anyways, here's some empirical evidence. Also, there are studies about trading the news. Okay, like they've gone and they've made robots that just trade off of the news, just using a machine learning algorithm in trading news, and they found that had a profitable edge. Okay, and this person doesn't have any empirical evidence. So what do they say? Oh, well, I've been trading and I make money every day and I don't pay attention to the news. Okay, prove it. And they don't. Why is it always happen this way? Person makes an assertion. I say, empirical evidence doesn't prove that assertion. And then they say, well, my results prove my assertion. And then you say, okay, prove that you have the results that you have. And they don't show it. They will say, well, I'll show it if, you come and watch my YouTube channel. Well, no, I'm not going to. Why would I watch your shitty YouTube channel if you're not going to show me that? You're making a claim and then you won't back it up. I told you guys I lost money in 2020 on futures. I made money on stocks. I don't think you really particularly care about that, so I don't think there's any point in showing my broker statement. And I made some pretty embarrassing trades in futures too, by the way. I had that $500 loss day. So that's why I just don't make performance claims like that, because I know that I don't have it all figured out. And that's why I tell people, probably you're going to lose money trading futures, because that's what 95% of people do. And you got all these other people that say, well, you can. I will teach you how to make money, and you just follow what I do, and you won't be in that 95% of people that fail, but then they won't prove it. I don't understand. If you're making money from doing it, why wouldn't you just have the statements? Frankly, if you're making money from doing it and you have a YouTube channel, why wouldn't you already have the broker statements prepared? Like Ross Cameron from Warrior Trading, he posts them every month. You should be able to just go and say, oh yeah, I post them here on my website. Go over here. But you don't get that, do you? You just get this they keep yapping, but the broker statements don't come out. I don't understand. Can somebody explain this to me? Is there another possibility here? Is there another possibility here other than that they're full of shit? So I look at that, it's like, okay, post a broker statement. They won't post a broker statement. They're full of shit. What's the other alternative? What's the other possibility? Because I don't see another. If you actually had the profitability, then you would be able to just post a statement. And I wonder, when these things happen, am I the first person to ever ask them for a broker statement? Because that's the other thing, is that they act like they've never gotten this before. Which is just like, guys, if somebody makes a performance claim to you, ask for their broker statement. Always. Any claim, you should ask them for the evidence to back that claim up. Improv is big in chess and drumming. Yeah. That was good. By the way, Keller, you asked a question yesterday before we ended the stream that I really wanted to answer, but I can't remember what it was. What was your question that you had asked, at the end of the day? You don't remember either? Okay, wait. I can find out. And then we go to the end of the video. And we mute that, of course. Winston at the end of that stream, do you remember Hertz as a stock from, was it spring of 2019? I thought it was a little bit later than that, but yeah, no, it was spring of 2020, right? That was crazy too. I mean, Hertz didn't get the same degree of media attention, but I really think of all of the things that this market, and I refer to this market as the kangaroo market. I think that the craziest thing that has happened in the kangaroo market was everybody buying in, everybody buying into Hertz. Jeez. One of the best pieces of advice I ever got about chess was to play faster. Oh, really? Is that because when you play faster, then you have to rely more on strategy instead of trying to game out every move? Because that was something I noticed. So I played it as a kid. I never considered myself, like I would play it against my dad or whatever, right? And I just, of course, he'd always beat me. I'm like, well, he's just my dad. He's better at it than me, right? Okay. So, I generally tend to think of myself as pretty smart, but I start playing against one of my missionary companions who he's a pretty smart person, but he's not like a book smart guy. He was like more into acting and stuff like that, right? So I'm thinking, well, it's something that should involve logic and strategy and so forth. I think I might be able to get better at it than him. So I play him the first time, and he just like absolutely schools me. Like the way that you would expect somebody that is really into chess would beat somebody that doesn't know anything about chess. So I was like, okay, but as I keep playing a little bit, I should be able to get better at it, and I'll be able to beat him. No way. Never came anywhere even close to being able to beat him. And he would explain like how he played it was like, he never thought about, okay, if you move here and you move here and all those things. It was all like, okay, I want to have my piece in this particular part of the board because it gives me control over this. And that was like his entire strategy. It was all tactical. It was there's strategy and tactics, but it was never going through the moves and trying to think about what the most optimal move was by just seeing all of the possibilities. Nobody memorizes every single move, so what works better is to learn strong moves that tend to work, little nuggets of generally useful information. Yeah, it was really interesting. But that was the point at which I started to realize that there are some of those things that I'm really just not very good at all anyways. Oh, you were asking, explain to me about dodge and breakouts, because I'm still trying to wrap my mind around breakouts and if they were even good or just a lie that people want to believe in. That's what it was that you were asking. So here's the problem, is that people want to look for chart patterns, right? So you come in and you get a chart pattern, okay? Well, we're going to see something that's like, it's kind of going, and then all of a sudden, boom, okay? If you want to read a book, it's called How I Made $2 Million in the Stock Market by Nicholas Darvis. It is probably like the main blueprint for how day traders have traded since. They look for something in a range, they see it breaking out, and they buy it. And that's how it works. But here's the thing is that, I can also do this. Whoop-oo. False breakout. False breakouts are a thing. Do you have a way to reliably predict whether it's going to be a false breakout or not? I've spent a lot of effort trying to predict that, especially on the treasury, man. In the treasuries, you'll get this thing. Well, I can even show you. You can even see some of them right now. You get these. I call them zippers. You come over here, and it'll just swipe back and forth across those two prices forever. And then, oh, it breaks out to one side. So does that mean that you sell it? But then you get this thing where it's like, oh, okay, it broke out to the upside, but then it didn't. And so I did a number of algorithms trying to find with a certain accuracy whether it was going to do one or not. And the most that I could ever get out of it was a 55% probability, which didn't make up for the risk reward. It's like I for the life of me, I've tried and tried, and I have not found any kind of, not even in order flow, like some sort of really conclusive high probability signal that like a breakout is going to be a good breakout. The only one that I know of is news. That you know that the particular piece of news that just came out that caused that breakout is something that should substantially increase the value of that security over a long period of time. And that's it. So like when we had that jobs number earlier in the year where we were expecting a negative number and the number ended up being positive. And, you know, as soon as that bought out, you got like a technical breakout and you could have bought it. And then all of the people that don't pay attention to news and are waiting until the market opened to trade it, you know, didn't get as good of a price. But you could just hold that all day, you know? Anyways, it just kind of comes back to these things, which is like, okay, so person X believes this thing. Show us a strategy and then we'll program it up and we'll see if it actually works. This is another thing that really, really drives me crazy is when people come in and they say, oh, technical analysis works. And it's like, okay, share with me the strategy. Let me backtest the strategy. I'll do it off stream. I won't show anybody. I'll go in and I'll program it. I'll tell you what it does. And they never get it. They never give it to you. Why not? Don't you want your strategy backtested? I don't get it. If you're so certain that it works, why wouldn't you want it to be backtested? I don't get it. But instead, you just get talk, and no actual, like, let's get into empirical evidence. You know why this is driving me crazy? It wasn't just because I had a run-in with somebody on Reddit over this, but it's also comes down with inflation right now. So when I look at this market, and we go back again to the beginning of the stream, right? Oil moving up generally. Gold moving up past 3 days. Silver moving up past 3 days. Copper moving up past 3-4 days. Dollar moving down. This looks to me like a market that is anticipating inflation. That doesn't mean that we're going to have like a recession caused by inflation, but it does mean that people are positioning themselves for that potential risk now. And then you go over and you look at this stimulus bill. Okay, they worked it out yesterday. Did you hear? They worked it out yesterday. It's going to be a $1,400 stimulus with $3,000 per child, and all of the eligibility is going to be the same as the last stimulus check. So everybody's going to get one unless you make over $75,000 a year as an individual or $150,000 a year as a couple. And that's what's going to happen as of right now. The question is apparently whether or not they will include the wage increase. Joe Manchin said that he didn't support it. The CBO came out with their report yesterday, and their report said that it added to the deficit by $54 billion, which means that you can't pass that through reconciliation. because of the Congressional Budget Office's report. They're maybe going to try anyways, but it looks like it's not going to happen. So here, you're putting all of this money in there. And I say, that sounds like something that could cause inflation. The market seems to think that that's something that will cause inflation. There are some Democrats that are saying that too. Okay. So what is his first name? Oh, Summers. Summers is his last name, but I forget his last name. Lawrence, Larry, whatever. Summers. He goes through numbers and he says, I don't know if this is a good idea. It's too much. It's too broad and it's too much money. And they all and what do you get from them? Do you say, nah, it's not a problem. Okay, so then show us the numbers. Show me the empirical evidence. If you're so certain that it's not going to cause inflation, show me the evidence, the historical empirical evidence that shows that the economy can handle that much stimulus all at once without it resulting in inflation. Why don't they just show it? And they don't want to talk about it. You get blah, 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 and then no evidence. No numbers, no models, no studies. Why? It's like the whole world, and I'm seeing this every day now. It's like all of a sudden, Donald Trump isn't president anymore. Empirical evidence doesn't matter. Okay. Are you still going to edge clear in a group? I might. That's that's one of the reasons why I'm kind of like, well, maybe you should go to edge clear. If I do the edge clear thing though, we might want to wait until September. You know what I mean? I'm just kind of that's the point at which it's like, okay, when would be the best time to try and pull everybody in? And I think that it's either the end of the summer or the beginning of the year. And I feel like we kind of already missed the beginning of the year. You know what I mean? So if I do that now, if you go over to Edge Clear, so in the Discord, we have a link. There's a link where it's not necessarily an affiliate link per se, because I don't get a commission from it or anything like that. But if you go into the announcements channel, I have a link somewhere up there. Yeah, actually, all you just got to do is edgeclear.com/speculator-Seth. And what that will do is if you sign up, if you move over to that broker with the link, and we ever do something in the future, they will know that you were attached to me and that you would be interested in joining our group. So you can go over now, and if we ever start a group in the future, you'll be notified and be allowed to join the group. Okay? And thinking about trading the NASDAQ on certain indicators, what kind of future news announcements from the government should I be wary of? Well, so when you're talking about announcements, so there's kind of interesting stuff, because there's expected news, there's scheduled expected news, there's expected news, and then there's unexpected news, and then there's expected unexpected news. Okay, so if you come over to forexfactory.com, right, you look at all these are all the numbers that you kind of got to look for. You notice, by the way, that here at the beginning of the week it's pretty light. It's pretty light stuff. Today we've got nothing. Jolt's job openings, okay, at 8 o'clock. Tomorrow is the big day though. Oh my. Tomorrow, that CPI number, they're expecting spot 3 and core CPI to be spot 2. Okay. Let's look at the range of things. Okay. So we're expecting spot 3. We've had spot 4. Recently, we've had it as high as spot 6. Okay. And we've had a situation in August where we were expecting spot 3 and we got spot 6. Okay. If that CPI number comes out tomorrow and it is spot 6 like it was back in August, there is going to be chaos. This market is going to react so strongly to that because that would be further confirmation of potential inflation. And this market will get really interesting really quickly. You know what I mean? You think I can get a lower minimum deposit? They're asking for 1,000. Are they? I thought it was 1,500. So I would say that you should just save up 1,500 and wait to go over until you have 1,500. If you're going to trade micros, like I understand that, like, you know, that like takes out a lot of people, but it's okay. Like, you can save it up. Maybe it will take a year, but I think that you'd be much better off a $1,500 account, because I've traded a $500 account, and you know what, like, I've gotten away with it for a while, but overall I've found that, you know, if you're in a funk or the market changes on you, that it can often be $500 before you even realize what's going on, let alone fix it, you know? So I think that they're asking something that's smart. There are ways which thinkers have dug into those questions even deeper, and it's really basically just an interesting topic. And like I said, how you'd make a good anti-theistic atheist. I don't know, man. I think that Straterra makes me overly logical. When I was not on ADHD medications, people told me that I was like such a, I don't know, like open and genuine person. I think I still am a pretty open and genuine person, but it was just like people would just tell me stuff that like they shouldn't tell me. It was like I'd be on a first date and the girls would tell me things about themselves that like you shouldn't tell somebody on your first date. And I'm like, what's wrong with these people? And then when I started taking medication, it was like they didn't do that anymore. It was like the dating before and after medication was like a world of difference. I did way better before medication, by the way. The only success that I really had after medication was the woman that I married. Yeah, it's just weird. It makes you, it suppresses your limbic system, which is like the emotional centers of your brain, and makes you more logically focused. So I feel that what I have is unnatural. My thinking, I think it's unnatural. And I often sit and wonder, like, was all of this going on all of the time and I just never noticed because I wasn't in that logical frame of mind? Or has something changed? Is it just because I'm into trading more and so you run into it more? I don't know. Logic is unnatural. The degree to which my brain is oriented towards logic is unnatural. I don't think that you will typically get that unless, like, you're autistic or you're on drugs. I guess I don't really know that for sure, because I've never seen a study that shows that, you know, the degree of logicalness or whatever, but I feel like sometimes that I've turned into a Vulcan. You get what you mean? How sociopaths can be hyper logical? Sure they can. I love their support compared to AMP. It's like sleeping with Pamela Harris compared to Sarah. Or you're rational and you're curious. Well, I probably am pretty rational anyways, but not the Ritalin, I take Straterra and then a small amount of Adderall. Don't tell anybody. Yeah, it makes you really logical. But it's just... But the thing is that it's not like I don't get emotions, but it's like The emotion that I feel the most is anger and frustration that people won't be straight with you. This thing works because I make money every day doing it. Okay, post broker statements, and then they do everything they can and they don't post a broker statement. Like, it's really fun. In fact, this last one is like the funnier one, because there are some people that will just shut up. There's some people that it's like, okay, once you tell them to post a broker statement, they're like, oh, well, they make an excuse. I'm not going to post a broker statement because you have no business seeing that. Or they just kind of quietly go away. But then there's the other one that's like, they try and start joking around with, they think, oh, okay, I'm just going to ridicule the person and everybody will go along with the ridiculing and forget that I asked for the broker statement. And it doesn't work. That's the other thing that I just don't get, is that every time that this comes along, like, the good traders know. The good traders think about it and they go, oh yeah, if you're doing well, you would just show the broker statement. And then they start ignoring that person. I got to tell you though, the biggest red flag for somebody, if you're listening to a YouTuber or somebody selling a course or software or whatever, is how they react when you ask them for empirical evidence, right? And for specific claims. And the really good ones know to not make specific performance claims. Why? Why is that? Because the ones that are really good understand how unreliable performance can be, right? These people that truly make money from trading futures, like that go on to become CTAs, they know that sometimes you have a bad year and sometimes you have a good year. And that if you constantly go run around telling everybody, well, I win all of the time, that eventually you're going to lose and it's going to make you look really, really bad. So it's better to just not say anything, to just not make a specific performance claim, and instead base all of your arguments off of the empirical evidence instead that you have. Because the only way that you tend to get to that spot is from empirical evidence. By the way, I'm kind of taking note of the market here. We did have a little bit of a drop that you can see in the chart, but this market still looks incredibly range bound and tame. So I think that we're kind of on the same thing as yesterday. We could try some technical trades, but I'm going to keep the stops and targets close. The farmer doesn't count his money after every piece of corn he sells, and you wouldn't want a lawyer that counts his earnings in the middle. Yeah. So this guy was like, well, I trade live so you can just watch it live. And I'm like, okay, but what is your performance over the past 3 years? Like, come on. You have a YouTube channel. It doesn't impress me. I've been doing this longer than all of you, and you probably all got the idea from me. And then people turn around and they make all of these exorbitant claims with it that I know tends to not be the way that it works. You think you want a short? Wow. Hold on. So I think that we could get a short here, but they're a little... So if I see any kind of a buy, it could flip it really easily with the current balance of things. So like, I'm not seeing like the book isn't like giving us a signal that like there's a clear imbalance. Like the longer term trend is down, but there's also like support at 38.98. And as we pointed out earlier, there's so much gamma at 3,900 that they're going to have a tendency to want to stick around 3,900. Like if I take a short here, like we could take a short here on the close of the lows, right? I'm not going to be letting it run for me. See that, right? No, I'm not going to do it. You got it planned to add 08 and stops over 10 to 13 area then if it's a real short. I'm not quite sure I get what you're talking about with that. Maybe you were talking about ZB. Yeah, I don't like the setup right now. There's very clearly, like, I wouldn't say resistance, but there is a real reluctance for some reason for them to push below this. Okay, so there's the move. So if we had taken it, it'd be at a 98.25, right? So we'd be looking for 96.25. But you see, like, somebody came through with a big order and it's already, like, it doesn't look like there's much edge in this market right now. Or how do I say this? Like, if we were to have predicted that, and it was worth 6 ticks, that one move in particular that we might have been able to predict because it was like a break of the low. Okay, 6 ticks and the number of orders that traded it and everything. How many contracts could you actually trade with that? And it doesn't look like very many, right? Zero hedge stock slide under gamma gravity and eerie analog appears. What's this? They find a past where it's been like this. Notable fact is that amid the chaos, all of the GameStop roller coaster single stock gamma levels remain near record highs, signaling call buyers weren't scared off. Spot Gamma anticipates this position to build into 219, opening a window for a trend change for the last week of February, which brings up some eerie analogs to last year's market performance, specifically. Yeah, that's a really dumb. That's a really dumb yeah. It's gonna pull back. Yeah, I think so too. This is what Zero Hedge is posting. I'm actually really surprised that they're saying this. They're saying, okay, this is what happened last year. Hey, maybe we will get it again this year. Yeah, that is not what happened, man. That is not what happened. I remember this very, very clearly because this spot right here, I made money on that. I traded that. I made money and I said, hey, this coronavirus thing, it seems to be scaring the market a little bit. We can sell. And then the market said, oh, no, like it's just in China and everything is under control. And then it was like, oh, except for that now it's in Chicago and now it's everywhere. And blah. Why did that happen? Because of the coronavirus, not because of any, market setup pattern or gamma or, this is just nonsense. Even for them, just nonsense. You know what? This thing keeps telling me to update. I'm going to update it. Aha! You just threw me into some sort of epiphany moment. Lots of thoughts going on in my head. So, weird question. Are there any books specifically on portfolio management techniques instead of investing? Yes, there are. So hold on. I'll launch that. So I honestly haven't read too many of them, so I don't really know the specific books that are out there, to be honest with you. But this guy over here, Mr. Patrick Boyle on finance, 84,000 subscribers. I really think that it should be higher. He should be at least over 100,000. He does stocks. And this guy, he has so many videos about this sort of stuff. Sometimes you kind of have to search for them, and they aren't his most popular videos, though. But he posts this stuff all the time. Okay, how Jim Simmons Renaissance. So this kind of explains a little bit about the kind of portfolio technology theories that they use. Soros and reflexivity. This is another one. But really, when we really get going back, okay, here you go. Risk parity funds. How do they work? That is exactly the sort of thing that you're looking for, man. What are SPACs? Well, maybe that one kind of. Does he have one on long short? I bet you he has one on long short. Does correlation matter in markets? I'll have to watch that one later because we're going to have to talk about correlation with GameStop if the GameStop thing falls apart today. They're like, a lot of them are like the really far back ones. Okay, applied portfolio management. He's got like a 4 video series on that. Six videos on that. Oh my gosh. There you go. Conditional VAR and stress testing. So this VAR is how they manage their risk in a stock. Well, in their portfolios. Right. Like this is like, okay, if you want to start your own hedge fund, right? And what I would do is if I was going to approach that, the way that I would do it is first I would go in and would say, okay, so here are the strategies that we know exist out there, long, short, and risk parity, and all of these sorts of things. Are those, well, maybe they're kind of this similar words for the same thing, isn't it? Because let's see here. No. Risk parity is more like stocks and bonds. Yeah. Long short is like you long the companies you like and you short the companies that you don't like, and then that kind of reduces the variability in your portfolio. It increases the Sharpe ratio, and then you can like really leverage up as a result. And that's how they make money. Risk parity is you have a mix between stocks and bonds. So it's a similar idea, but anyways, so what I would do is I would go in and I would look at the ones that exist, and then I would like program them up. I would like program up a strategy that invests in a large number of companies based on that and see what the performance of it is and see how it performs historically compared to the market average, right? And then, I would go through all of those that you can, and then that should give you a good base to like start making your own strategies on that sort of a thing. And that's how I'd approach it. I go online and look at hedge fund holdings and go the other way. What? Isn't the stat arb strategy all based on correlations? Well, there's those sorts of things too. The thing is that there's some strategies that so when I think quant, I really tend to think more portfolio theory, to be honest with you. I think that a lot of the quantitative trading that people are, because honestly, like, what is quant trading? It's trading with quantifiable numbers and like direct. Isn't that just technical analysis? But then when you look at it, it's not really, you know, it's not really the same thing as technical analysis, is it really? Because it's a quantitative analysis of like the market as a whole and how you can position yourself in different assets to increase your returns over the market as a whole. So it's kind of a little bit different, right? But then there's other forms of trading that maybe you could consider quant trading, but they have more to do with taking advantage of a specific inefficiency within a stock or a group of stocks. It's like jazz technical analysis. Yeah. Well, this is why I really don't think that the phrase technical analysis is helpful. I think that we are stuck with terminology from 1920 and 1970, right? Like, okay, during that period of trading, the efficient market hypothesis was like king. And then in the 80s, all of these quant firms came along and started making billions of dollars, and everybody said, oh, maybe the efficient market hypothesis is wrong. And so now it's like, it used to be technical analysis versus fundamentals and all of these sorts of things. I don't think that framework is useful towards guiding you towards the sorts of things that you can learn where you can actually find some edge, right? I don't think that there's technical analysis and fundamental analysis or whatever. There is data and there is analysis and there is strategies. Data, where did it come from? Was it generated by the market itself? Or what did it come from? News from outside of the exchange, news being brought into the exchange, a survey. Where did the data come from? And then what kind of analysis are you doing on that? Is there a certain kind of process that you're running it through? And then, what are you comparing to what? And then the strategy. What are the actual conditions that you use to enter into your strategy, right? My view, the efficient market and inefficient market exists on a seesaw of sorts. Well, that would mean that you believe that the market is inefficient. I would say, here's what I think. I think that the market tries to be efficient, but that it is impossible to be perfectly efficient. Well, are you still in your trade A's? Is this what harmonic trading is? I think that harmonic trading, they're trying to take advantage of swings. They're trying to find some sort of oscillation in the market and take advantage of that. Honestly, I have no clue what harmonic is. Like here again, it's like a lot of the terms that people use for things aren't really well defined. Like when you go into like what sort of things large funds use, they're well defined. Like if you say it's a long short equity strategy, everybody knows what you're talking about. But if you say I trade off of price action, nobody knows what that means. That could be anything. Like it's so funny because people say price action is not technical analysis, but then it's like you're like doing support, you're using past support and resistance levels and expecting it to behave a certain way off of those levels. That's technical analysis, guys. Like, you know, that's funny. Show us the empirical evidence that God is real. I don't have any interest in doing that. When somebody like that comes along, when you can just straight up hide that user on the channel. Like, especially if there's somebody that's never posted before and they're immediately going into insults, it's like, we're just going to ignore them, right? Price action is absolutely, I think it is. But then again, when you look at so the way that I tend to use the word technicals is that it's data generated by the market. That's how I view it. You know? So close, come on. Oh man, GameStop is getting creamed right now, man. Look at that. That's a little scary. Is it scary? I mean, I don't know. I guess it's kind of almost expected. What did I say? I said like, maybe they can stay between 50 and 60. So do you think that they're going to break 50 now? Because I was just kind of spitballing. When I see why am I thinking this right now? I see that move there in GME, and the first thought that I have is, does somebody know something? I don't know, man. It's a little, I don't know why I think that, though. Internet trolls test very high on the dark triad scale in psychology. Well, I think it could be any number of person that has a beef with me because they're stupid. It's dead. It sure doesn't look good, though, man. I mean, I would expect that before this is through, that GameStop will go below the level that it was when it started. That's what would tend to happen. You'll get overextension from the shorts getting washed out, and you get overextension from the longs getting washed out, and then they will balance back out at the mean. '20s. Well, I was saying 10, right? I really think that there could be a very fast and quick collapse if the short interest numbers aren't what they want. Like, think about it. The whole reasoning for anybody that's still in that trade is that there's still a lot of shorts. And if the FINRA provided data says that it's not, well, what the hell? Okay. I think I got lucky there, man. That's interesting. Oh, I wish I had timestamps. I guess I need the timestamps. Okay. Fonts and color, or no, display, time. It won't show me the ones in the past, but it looks to me like when I got my fill, that somebody came in with some market orders. Look at all of that right there. That is whoosh. Somebody came and swept all of those prices, and then there was a few that were sitting there waiting to buy 30, push back at 3,900. That was unusual. And I don't think that there was any news off of that either. That was just a total unusual, whatever. Okay. When asked about the Dems using budget reconciliation process to avoid filibuster to pass the next COVID bill, Democratic Michigan Senator Peters replied, by whatever means necessary. Okay, but you can't use budget reconciliation. So this is really something that's kind of, I'm a little confused on. No, wait, you have a question. Let's answer this question first. The trade itself around the meme stop seems like the complete typical thing that always happens. Bubble and burst, but the way people talked about it is different. Well, yeah, well, kind of. I mean, here's the thing is that there's always going to be overextension, and then when people take profits, that's going to go the other way. Like, that's just what happens. Okay? It's going to be the same thing with Bitcoin, right? So there was an impact from Elon Musk buying it, and it moved him up to like 40K. And then there's a short-term regime change afterwards, okay? And then what is likely to happen at that point is other people from all the way back here are going to take profits, and it's going to push it down further. But instead, what happened was Elon Musk came in and tweeted, and so you got another impact from the people trying to follow Elon Musk, and it came up, right? So now you're going to be in the same thing. It's going to be like this. It's going to need another impetus of people buying in to continue pushing it up, right? Now, why are stocks able to continually make higher highs? Because you continually tend to see good data and more people coming in. And the number of people that can come in versus the number of people that aren't in right now, it's always like a lot. And so things can trend for a really, really long time, right? But there kind of comes a point at which you have to wonder how much more is left out there. Bitcoin kind of becomes interesting now at this point because people are thinking that companies are going to buy billions of it. I'm really worried about the financial industry if companies are allowed to buy significant amounts of Bitcoin and have that on their balance sheet. But if they start doing that, then they're right. Bitcoin price probably can continue to move up in spite of in what would be a record speculative bubble. And this is also why they tend to go the way that they do, right? Is if it comes up like this, your price impact going the other way is higher because of the sign change. You will end up lower. So why doesn't Bitcoin go back to zero? Well, because there actually is down here at the bottom people that actually use Bitcoin and mine it and so forth, and they end up providing the support, and that's what short circuits it and keeps it down at the bottom. That's why when I buy Bitcoin, I wait for them to get there. I'd be really surprised if governments don't make cryptos illegal. I agree with you. At the very least, I think that governments and regulators are going to be extremely concerned about companies buying an asset when there is a ongoing legal investigation from the New York Attorney General over this, you know? It really is like, I don't think that this can go on forever. Okay, so interesting. So they did end up moving down. So do you see how that worked, right? So what did we get? We got a slight up move, sign change, right? First bit of it was there, and then there's a second bit of it. How much do you have? So I have some really small coins, and I have a few $100s in these small coins now at this point. And then I'm short MSTR, which isn't working out. So I would say that I'm kind of hedged both ways. Kind of hedged both ways, and if either of those sides of the trade were to like move, I would make a ton on it. So So anyways, what was I saying about this? Oh, here was the clue right here, right? Sign change. We're generally moving up, and we came into a large orders aggressively selling. So that large orders aggressively selling against the trend has a larger price impact. So we got out of our trade. I wasn't sure what was happening, but probably we should have gone short here. Now, the question is how large is the meta order, right? Could that be more selling? It's possible. And that's where we were going to want to start watching the phase of this. That's also why we want to watch for news. I didn't see or hear any news when that was coming through. I do see a couple of pieces of news that sound bad, like German coronavirus lockdown should continue until the end of February. Dem's talking about budget reconciliation, GameStop getting hammered. I don't know if that's necessarily bad for the market overall because of the long short strategy, but yeah. So it's kind of like doesn't look like that is the case. So that, I think, increases the chances of it being a large meta order that's not finished. I imagine game theory has massive implications for the investor. Yeah, I've never gotten into that kind of a model, but I'm sure that there are certain models that you could use to try and predict market behavior that may be based off of game theory sort of things. I also think that there's a lot of rock, paper, scissors in the market. I don't think that people realize it, but it goes through cycles where different strategies work better, and I think that it's because of like a metagame. Or a certain strategy becomes so popular that it becomes effective to trade against that strategy and so forth. Okay, so note here now, the price is coming almost completely back up, but on significantly less cumulative delta. You can see they came almost all the way back up and the delta didn't move back up at all. The book does show positive though. So now we're back to the scene of the crime. Let's see what they do. Okay, so there was a little bit of aggressive buying through there, but it fell back. Was always thinking in terms of fractals and stuff, and so I wish I also understood Fibonacci investing better because I don't really know how people use it. Oh, actually, you know what? I had something I needed to look at. Let's see here. I don't know if I'm kind of sitting here like I could buy 0325, but let's just throw it out there. 0325 to 0525. It's not giving me a clear no. Yeah, I'm just gonna leave it alone for now. They seem to want to fight over that area, so I'm not going to get in the way. Okay, so I have a fractal indicator. And I used that fractal indicator and I wasn't too impressed with it. So now somebody has posted a new one. No. And so I want to see what this new one looks like. It's a fractal dimension index. Okay, so he has batted it down there from 03 a few times, and it's looks pretty persistent. Fortunately, the price that they're giving you isn't the best. I think my time is better spent doing this. Okay. Dimensionless FPE. Huh. Hmm. Polarized fractal efficiency is an indicator that uses fractal geometry to determine how efficiently the price is moving. Well, it does appear to be a little bit better. This kind of gives me a weird read. I don't know how you read that number. Number over 1. Does it ever go below 1? Can it go below 1? So it's unclear to me how to even use this. Just looks like noise. It actually looks like, oh, the fractal dimension one was the one that I had before that I didn't think was very good. So it does seem that when it gets to a high level, 0.5, that means that it's being very efficient. Do you get anything? Let's see here. The on-bar update logic is not that complicated. Man, this whole thing up here at the top is kind of messy. Okay, so I went and I made a strategy here off of this. What was it? Where did I put it? No. I know I tested it with fractals. And no, why would I delete it? Fisher, double stochastics. Well, I guess we just have to do it ourselves. Do it again. When are you rebutting with insolvent? I don't know what you mean. Fractal order blocks are interesting. I mean, it seems to me that when you're coming off of negative 0.5 and it's moving up, that suggests that price is starting to become more efficient. Let's come back over here and do it. Right? I don't know. Maybe this just means buy and this just means sell. I don't know. I could go through and we could just back test it randomly and say when it's 0.5 buy and when it's 5 sell or something, but it's kind of weird. Oh, who won? I mean, here's the thing is I don't even know if Ikari was what his argument was, so. But I don't think you can see him again. Okay, well, it looks like if we had taken 325 at the point that I pointed it out, that you would have experienced a lot of turbulence, but you probably would have made it. This whole conversation is coming full circle. That still looks okay for further upside, but I don't know what the deal is there with was the deal there with 3903, but they did get over it. You want no the way that it works is if somebody's causing problems, we just get rid of them. Like, I understand that it can be fun, but we are trying to trade here, right? No, he told me to mute him, remember? He told me to mute him, so I muted him. I don't know if he was just having a bad day or what his deal was, but I assume that whatever the reason is, maybe it's probably better that way then. Oh man, you want to buy that high in 06? It kind of looks tempting to me. I'm feeling a little bit of, oh, I should have, you know? I can't make him. He would have to. I don't even know. I'd have to go and look. By the way, how is AG doing? Doesn't look so hot today, does it? They had some okay gains yesterday. They're falling back, and silver has seen a pretty good dip so far today. Am I seeing movement in the... Nope, it's just coming along in metals for whatever reason. Did gold go too? Yeah, not as much. Was maybe somebody just bailing? I don't know. That's something that I've found happens in the metals often, is you get these like aggressive down moves that I don't know where they come from, because I never see any news related to it, at least. And then it will often completely retrace it. It's like... metals are crack cocaine. Yeah. Well, I mean, I like the longer term outlook potentially in metals, but I certainly would have a hard time trading metals, day trading them, huh? And I only like the long term outlook in metals because I think that there could be inflation coming. Okay, so there's going to be some news here in 5 seconds. Job openings estimated 6.5 and actual 6.646. So depending on which estimate you're using, it's kind of just in line with expectations. When you hear a sad story from markets, it will always be like, well, there was this day I was trading GC and NQ. Yeah, it used to always be oil, but I'm starting to notice that people have kind of caught on to that oil is difficult to trade. And the people that trade it are pretty focused just on oil. But oh no. Yeah, House managers say they will bring evidence that nobody has seen before. In Trump's trial this week, aides declined to answer questions about what that secret evidence is, only saying, stay tuned. Yeah, I'm not going to hold my breath. I bet you that they're overhyping it. Oil is pretty technical. It's just that people over leverage. Yeah, I don't know. It's like... The thing with oil is that it will seem like it's being really technical, and then all of a sudden it'll do something really crazy and fuck you over. You know? That is just, man, yeah, you need to have a huge account to trade oil. I'll say that. But I think it's just like, it seems like it can be really technical, but then because the liquidity can be so light, you really can get these just really wild and crazy moves off of nothing. So it's kind of funny the way that oil trades, because it's a lot of volume, but not a lot of liquidity per price. And that's why it moves the way that it does. And I don't know why they have it that way, why they would want it to be that way. It kind of makes me wonder why do they have certain instruments sized different the way that they do? Do they size it just to give people the variety, or is there something more to it? I don't think it's a mistake that the treasuries are the most liquid ones. I think that's what the government wants. Yeah. They want their treasuries to be extremely liquid so that their currency will be stable. Okay, so they bought back a good amount there. No fill. Since you worked at an investment bank, can you tell us if they are required to have the same intraday futures margins as retail? Okay, well, so first of all, we're talking about like a hedge fund, really, right? Because over there, it's you're either executing a hedge fund's trades or you're executing the hedge fund trades for them. So like, or an algorithmic trading. Algorithmic trading was a lot of the volume too. But basically, when you're executing for a hedge fund or whatever, there's no margin. Instead, you trade on credit, which I guess is kind of the same thing because you get a certain amount of credit and everything. But yeah, they give you an amount of credit, and the amounts that they're allowed to trade are mind-bogglingly huge. Now, the individual people at the firm, they are not even allowed to touch futures. But have you been following, Keller? Have you been following this thing on TikTok about whether or not this what is it called? There's this song and they're claiming that it's 11/4 time. I can't remember what it was. Was that Outcast song, right? Hey, yeah, that's right. They were arguing about whether or not Outcast Hey Yeah is 11/4 time. Yeah. So I was for some reason seeing a lot of that on TikTok. You go, that's all I really know about it, to be honest with you. When I was looking at the risk control systems, basically every trader and every hedge fund or fund that they traded with had a credit limit, and if they exceeded the credit limit, the controllers would be notified, and that was basically it. And then I didn't really know a whole lot about that beyond when we just notified them. A good trader could probably actually gain a sort of feel for the market. Well, you can, but the problem is again, like, it changes, right? So then what ends up happening to most people is you'll get the feel of two kinds of markets. I mean, look at what I do, right? I kind of have a feel. Like, I think you kind of want this. We'll just do it for fun, right? I think that they're going to go and make a new high, and that the ebb and flow is that was kind of the pullback. Well, somebody bought it like right after me. That was kind of just luck, right? So you'll get into the fill and you'll start doing really well, and then it seems like as soon as you start doing really well, it flips around, because what's happening is everybody else is noticing that flow too, and then so many people are trading it that because of the impact of your trades, it starts being a negative edge, right? You get what I mean? And I guess that there's an ebb and flow to that too, but you know, you just have to realize that the nature of the market is that it's going to try and eliminate any inefficiency it can. And any inefficiency that becomes too obvious, there's trouble for it. And so this is where I think you kind of have issues with, just kind of watching it. I think that your analysis tends to need to be a little bit more sophisticated than that. I doubt I could actually be that guy, but I'm sort of saying that someone could hypothetically figure out the flows within flows and the flows and stuff. Well, yeah. But like, so let me take it a different way. You can go and you can write an algorithm that looks at the past market data and tries to find those particular patterns on its own, and then it can trade millions of different variations overnight to determine what was the best one and then use that. And every night you can go and do that and determine what was retroactively the best thing and then start trading it, right? And then what happens is everybody else starts doing that too with their algorithms. So then you're going to look at what was the thing that did the best yesterday. But then here again, it becomes a meta game, right? So then the strategy becomes noticing what worked yesterday and then trading something else based on how the meta game tends to go. So now you're playing a completely different game, right? So I really think that the best analog that most people, at least millennials and younger, will understand is like the meta in League of Legends. If you have a hero that comes out and is really, really good, you get a bunch of people playing that hero. And so then all of a sudden you get a bunch of other people playing the heroes that counter that hero. And so then all of a sudden playing as that hero doesn't actually provide an advantage anymore because everybody expects it and is prepared for it and everything. And there are points at which playing that particular hero becomes a disadvantage. And then the developers come along and change the thing, and the meta game, goes all over again. Or StarCraft, it's even a better example, because in StarCraft, the developers haven't changed anything in years, and they oscillate between what builds are the most popular that season. Every season it changes. Because there's not one strategy that is effective all the time, and so it becomes more a matter of which strategy are they going to use today and trying to predict that. Yeah, it says like improv jazz. Yeah. I mean, the people that truly become good at this from just looking at it are the ones that are going to be able to handle the changes quickly. The guy that when the market moves from it's really, really range bound to it's very volatile and it's up or down, the ones that can see that first and adjust the most efficiently are going to be the ones that last the longest. So on this one, I'm feeling pretty good about it today. I think that I've been able to recognize the past 2 days that it's a tight market. There's not a lot of news, and to only trade it for the 8 ticks, and we've been getting them. So I caught 2 today. And I'm pretty happy with that. I can just walk away with 16 ticks and be happy, right? In fact, it being 812, I don't know. I do kind of think that the E-mini is going to continue moving up, but Now I feel like the Rain Man. Yeah. I don't know. I would be interested to see somebody like that be put on today's markets, and because that's the thing, is that if you were trading pre 2008, yeah, I can show you like very specific things that you could do pre 2008 that you could make money on, right? For watching something like this, and it's going to move up, and I know that it's going to move up past this. I don't want to do it when it's like 137. But if I'm just watching here the 10-year, say I want to be long, so I'm going to put a bid in. But I don't want to do it when it's the mid price. So I'm going to wait when I'm certain that it's going to leave here. I'm going to put an order in here. Hopefully somewhere around 1,000 in the queue, so that I have a better position in the queue, right? And then when it comes back, it's going to fill me on all those, right? Getting a good position in the queue by waiting and getting in the queue when it leaves, right there, right? Okay. So now I'm 2,238 in the queue. If we tick up at 250, there'll probably be 4,000 in the queue. So I got an okay position in the queue, right? And then I'm going to watch this. It's really tedious, by the way, but then I'm going to watch this. If I see pulling, or I start to see a flood of volume coming and selling, I'm going to cancel my order. Okay. So we're getting some more volume in there, so I don't want to do it. Unless I really want to just straight up be long. Then I leave it in there. Get filled. Hope it moves up. There are these, or another thing that we could do is we could wait at 25. I can put a stop limit in here so that if it gets to 433, I will try hitting into that with a market order. I think that they're going to move up because there's some liquidity up here at 25, half, and 26, right? And then these are the sorts of games that you can play, right? Pre-2008, you could play that game and you could win at it. But then what happened was the robots came along. Like that stuff, maybe not those specific strategies, but I mean like market making strategies of that kind. That's how Anthony Crudelli made, $1 million in a year. Was just market making the extended session like that, right? But then what happened is the algorithms came along and the market changed. Okay, let's see, it came back down, so it was a good thing that I canceled it. GME yet another leg. Well, they haven't touched 50 yet. So I'm still kind of like, it hasn't touched the significant number yet. But we'll see. Yet, yeah. I mean, the way that it's going right now, it looks pretty likely to break it, doesn't it? Stephen Hawking wrote in the same book I mentioned earlier that the singularity was closer than we realized and that technologies would render us inefficient and disposable. Nope. I'm still super interested in GameStop. I don't think we're going to get like video traffic from it by putting it in the title, but Seth, what are your thoughts on Bitcoin? Is 100K feasible? Well, at this point, I'm not So if we get a corporate retail, if we get a corporate bubble, or what would we call it? What does it call it? If we get a corporate speculative run in Bitcoin, I'm not sure that there is any limit on how high it can go. I can only say that they are so far above what is actually transacting on the blockchain. It's an unprecedented move in Bitcoin, and that anything that happens to come in and change the situation in Bitcoin, say Apple comes out and says, no, we're never going to own any Bitcoin ever. That's so dumb. Okay. Would only take one thing. Dodge tank. Well, Dodge already kind of fell back down. The Dodge thing is so silly because so many Dodge are created every day that it's practically impossible to ever hold any real pump. Like it's really, I don't know, man. Like to me, the idea of doing a pump and dump in Dogecoin is just stupid. What you do in Dogecoin is you sit and you mine it all the time, and you'll have millions and millions of Dodge, and then you wait for some idiot to come along and try pumping it like they did before, and then you just sell into them. That's how you play that one. Like, the idea that you'll sustain any kind of longer trend in a coin that has that much supply is just preposterous. It's preposterous is the only way I can put it. Someday Elon is so that came up in the subreddit the other day, and I was saying, you know, if Elon Musk came out and tweeted about Garlic Coin today, I don't think it would be a good thing. I think that what would happen is you would get a big pump from Garlic Coin, and then if Garlic Coin didn't increase, you know, there's like a marketplace on Reddit where you can buy things for Garlic Coin. And there's like 2 exchanges that you can do it. So if that doesn't increase, you know, if Garlic Coin doesn't gain like more architecture from it, then basically what happens is you get a pump and dump. It comes back down, and all of the people that were involved in that are just sour about it and don't want to touch it anymore. And that's exactly how Garlic Coin got to the point that it was, is that it was pumped incredibly hard at the open when it first came out. It was not worth $1 at that time. I think now it could be worth $1, but at that time it was not worth $1. And you know, everybody was fooled into buying into it, and there was going to be a drop and all of these things. What do they call it? Where everybody gets a little bit of coin if they're in. Anyways. And then they're all just sour, and they say, I just got fooled, and they bail, and then they just leave it airdrop. That's right. It was an airdrop. They get sour, they just leave it for dead, and then it just goes nowhere until something finally comes along to generate interest in it again. Which, you know, a solid uptrend can generate interest. But here again, like, if you want to keep it sustainable so that Garlic Coin can actually like reach the price that I think it can, it needs development, you know, needs some developers to pick it up. It needs more exchange support. It needs to be on like a real exchange. These things. So MSTRs, well, I tell you what, the MSTR is just ludicrous, right? Here again, if we see a drop in Bitcoin, that stock is going to be so screwed. But it's like they're intentionally like, and here's the other thing on Bitcoin is that the behavior that I see is in line with intentionally pumping it. You get what I mean? Like, every time that it comes down to the spot where things looks like they're probably going to break and the crash is going to start, Elon Musk will come in and do something to keep it from happening. That doesn't prove anything, but That's why I just said it's consistent with if that's what was happening. Okay. What's new with there's nothing new with it. It's just a meme coin. Yeah. I mean, that's the dumb thing about it. But one of the things that's unique about Garlic Coin is it's a meme coin with low supply and that mines out quickly. So you're going to see that the Garlic Coin is going to reach the no new coins very quickly. And over time, you know, a lot of coins have been lost anyways. So this is where in Garlic Coin, if you get momentum going and people are actually using it, you could get something that runs really well. Like, just as an example, if Garlic Coin had as large of a market cap as Dogecoin, it would probably be worth over $100 per coin, right? And right now it's worth 1.5 cents. So I'm not saying that it's ever going to happen. Maybe it never picks up interest, but if it ever does go, if there ever is a speculative bubble in Garlic Coin the size that there is in Dogecoin, you're going to get, 1,000% gains. So it's like backwards dodge. It is. Yeah, it's like backwards dodge. I'm buying Dogecoin for the lulz. I just don't see how that's lulz, though. Is losing money give you lulz? No offense, Pineapple. You seem like a great guy. But I just... There's the supply that comes into Dogecoin is so much that it's really hard for it to maintain a thing. So, let's come back. Doge. I should call it Dogie. I think that's what the original person that said it. I think that's what he meant to be pronounced as doggy. But okay, here is the chart from of all time. Now notice the lows here. Let's start from here. Pretty consistent trajectory. Why is that? Because they're always printing. And the number of coins that are printed per day is like insane. So what do you get? You get a spike. And then it comes right back down. Now this spike is larger than the other ones, that's for sure. But yeah, it's going to look just like this, guys. Pretty much guarantee it. They're printing more money than Argentina. Yeah, it really is kind of like, I don't think those red. Well, is he really in Dogecoin? I don't know. Maybe. Well, that just kind of brings us back to the whole Tesla owns some Bitcoin, and it seemed to help their stock price the other day. And MSTR owns some Bitcoin. And that's basically the whole stock now. And it is now, like when we were looking at it earlier, we were looking at like 600, 800, right? It's already at 1,200. That stock, look at the chart, man. From when we started, look at the chart. Does not like alarmingly crazy to you? How do people not look at that chart and say, that's not sustainable? That I'm not so sure I want to be in that. Like, I remember when you see something going like this, good. When you see something going like this, bad. That's unsustainable. It will do this. I don't know of any way to predict where this point up the top is, I can predict when it is reached to the point where this is inevitably going to happen. I just don't know the price. And I'm telling you, you look at that one, MSTR, that is not going to stay that way. They're going to come back below 600 at some point. But a ton of stocks are going up. Well, yeah. But how does that end, you think? Because here's what happens is that it seems to me that the reason that stocks are moving the way that they are right now is because of inflation. Right? So what will happen is eventually the specter of inflation will become a big enough drag that you'll have a crash. I mean, that's basically what happened in the 70s, right? Yeah. Pull up the GME stock and it's the same thing. Yep. It's just like that's if there's any pattern that's consistent, man. It looks like this. And it's pretty common. And it looks to me like Bitcoin's doing that. The thing that's funny about Bitcoin too to me is that like they're pumping it and like the public continues to be like, meh. Maybe this one it's a little different. I'm starting to see maybe a few more people start to go like, I'm certainly like, well, I can't. I thought I could stand in front of it, but now it's probably not a good point to stand in front of it. But I still don't see like the wider public interest in it coming. They still haven't touched 50, have they? And we give them time, I guess. It's funny to go back and look at Reddit and see how, like, the sentiment turned in GameStop. And I don't think that it was because of the you know... Well, it's still like you have to be in GME, and if you say anything bad against it, you get downvoted. But I think that most of the people that have soured on it, they didn't do so because they saw a piece of fundamental information and it changed their mind. I think that the market forced them out. I think that it was like all margin calls, you know? Oh, Kevin O'Leary has $10,000 in a Bank of America account. Oh, in Robinhood. He transferred $10,000 into his Robinhood account, and he is going to try doing YOLOs. Okay, what are your plays, Kevin? What are your let's see them. I want to know. It can't be day trades, right? Because it's only a $10,000 account. Have you ever tried what do you mean? What do you mean by pickup? Where can you buy garlic coin? That's a good question. Let me, I forget the names of them. That's the biggest problem with garlic coin is that it's not on any big exchanges. But, you know, you have to buy Bitcoin and transfer it over. But like, you know, even $100 worth of garlic coin just like has a huge impact on it. So there's the price movement. Get rid of that so you can just see price in dollars. Oh, now they're at 20 cents today. That's pretty good. Here you go. There's two two markets. So you can go Fry Exchange or Crex 24. Now that's interesting. They say that the liquidity is 14. I wonder how they determine that. Oh, so it's just a low number overall. It doesn't tell you how many orders there are. So this is where it's kind of like, dude, if you buy $1,000 in garlic coin, like $1,000 in garlic coin could maybe be enough to push it up another cent. I don't know. But I don't think that this huge trend right here is like tens of thousands of people buying it. This is like a few dozen people bought it. Maybe, heck, who knows? Maybe some people from the stream bought it, and that's why it's starting to pick up momentum. But, man, so what does that have to go and look at? So is that another 25% on today? What does it list as the gain, the daily gain? Yep, 25%. Well, wow. All I have to say is wow. Ooh, the Democrats are going to put some stimulus for restaurants in their stimulus. I'm on wonder. Somebody I've been watching here. Who is it? The Cheesecake Factory, yes. Nah, they're not doing anything too incredibly crazy. What is your cost ratio, though? How much money you spend on each? Yeah, I don't know. That's where it's kind of like... Again, when you factor in the impact cost of a trade, for you both getting in and getting out, it will always be more than you getting out. Like, you're going against... That's a pretty hard to get away from. But what I'm saying is that if you come over here and you do dodge, it looks like this. Yep. And if you come over and you put the same amount into garlic coin, it'd be like this. The impact that you'll have is a lot greater. And again, if you go like this, but then your price impact attracts public attention, then it's different, right? Then you can get the public moving in right here. And could you get the public to come in on garlic coin? I don't know, maybe. I think that you would need more exchanges. There would need to be on one of the larger exchanges. I think. It's just me. But for now, it's on a good uptrend. And, you know, if you're willing to go over to those exchanges and buy it or to mine it, I think it's not a bad, it's a fun game. Actually, you know, I would totally, I would totally mine it. If you've never mined stuff before, mining garlic coin is fun. Nope, they're not quite there to 50 yet still. I don't know, it's, I don't know if people are really bailing here in GameStop so much as it is just market makers moving it around. I could be wrong, though. One night stand for every 30 girls I date. Wait, what? I didn't even know what he's talking about there. It's family friendly, but he's... No, that is not a... Listen. It's a square root. It's a square root function. It's not a boob. That is not a boob. It's a square root. The square root C times the square root of Q over V. That's what it is. That's what the graph of it is. the price impact of large meta orders. And then the price impact of a large meta order against with a sign change against the flow. Isn't that interesting? I think that one of the problems that I've had in my trading is that I didn't understand the sign change thing. So I would always come in here and I would be watching something and I would be like, okay, here we bought it. It's moving up. And then I'll see a big order there. And I'm like, well, that was a pretty big order, but we have some pretty strong momentum. So I think that this will continue going up. And then all of a sudden it just completely turns around just off of that one thing. And I'm like, I guess I was wrong and I should have gotten out there at that point. But now I understand that when you have a large order and it's a sign change, that has a larger impact on the market than when you continue to see large orders pushing it up and up and up and up. According to the empirical evidence. At least that's my understanding of the empirical evidence. I tell you what, it's that you make fun of that formula. It matters. It teaches us things. Teaches us to really, a number of really important things. It doesn't seem at first it seems like, nah, but once you start actually applying it, all of a sudden you realize, like, oh my gosh, if retail traders actually understood this, they wouldn't do half of the crap that they do. You think it's coming? You think GME is gonna crumble? I don't know. It still seems it's down 15% so far. It's funny. And MSTR is up 18%. That is just crazy. Oh, and the VIX is up today? The what? The VIX is up? Well, it's up from yesterday, but it's kind of heading down. Want to see VIX below 20 before I get too excited about that, huh? There we go. Anyways, a couple of other ones. It does look like even though silver was looking pretty good overnight, silver and gold are kind of struggling. The dollar hasn't really moved. The dollar's just kind of been sideways. So I don't know what's going on in the metals complex. What about copper? How's copper doing? And copper's kind of actually doing a little bit of the same thing too. So I don't know about that one. You wanted to die, you wanted to break 50. Well, the problem though is that, like, this is another thing, is that it seems like 50 is kind of turning into a big psychological level. And often what you'll see when you get a psychological level is they'll go, boom, okay, big impact. And then those guys take profits and it comes back, and then, and then it just kind of... That's the one that I really hate about that, is every study that I've done about those kinds of situations suggests to me that when you've identified an area, like every area that I can programmatically identify like that, we will tend to stay there. Or what is a better way of putting it? The best estimate for future price is current price. It's kind of like, it's pretty funny. It's because it's fat tails, right? It's like 90, most of the time it'll stay here, but there's fat tails. Or you have to draw it. You have to compare them. Real normal distribution is like this. And stock market distributions tend to be like this. So that's kind of why I'm not a huge fan of key levels per se. Okay. Now that one actually does look like a boob. Okay. I'm gonna be right back. Oh, look, I walked away and it went below 50. 50 is the new 40. I don't know. Like, it was actually pretty. What is the word? I must be having troubles today because I'm constantly finding myself searching for language. Anticlimactic. It seems awfully anticlimactic, doesn't it? But we'll see. Here again, this is one of those things where it's like, oh, does it just go down all day? And then the news comes out and it's like, oh, people must have known. So it always seems like that to me, right? Like, that's one of the things that frustrates me the most is that so often I will see a move and then piece of news comes out. And so you say, well, probably people must have known that that news was coming. But how do you prove that? You can never prove that. Frustrating. You know, a lot of these things that we've been watching I see a lot of red on there today. Look, so Apple and Google are up 0.5%. The VIX is up, but then GameStop is getting crushed. AMC is getting crushed. Bed Bath & Beyond, not so great. BlackBerry. Oh, Bed Bath & Beyond is 0.17% change, but BlackBerry is down 2%. And what are the things that are up? Well, Sumo Logic is up. Yeah, I don't know. And like not even the metals are up either, which is kind of weird. You don't think that the low on the ES is in yet? Wow. I still think that the most likely scenario for the ES right now is that we just rotate around 3,900. So could we come all the way back? Sure. Although I'm not getting any like directly actionable thing. In fact, that sweep right there kind of says to me, you missed the trade. It's time to stay out. Your thoughts on Ethereum? So I think that Ethereum has some good things going for it, but they still have the block size limit problem, and they haven't been able to handle, like, I remember when CryptoKitties was a thing, and like CryptoKitties made it so that you couldn't really get transactions done in a reasonable time in Ethereum. Like, this is the thing that bothers me. Every time I say that, I catch myself and I'm like, why am I saying it like that? What should I say instead? I don't know. Give me some suggestions there. Okay. Something that I see in many of these currencies going on right now is that everybody's saying, now is the time when it's going to go and it's going to hit $100,000 because widespread corporate adoption is coming. And I'm sitting here thinking, okay, do all of these corporations realize that they're going to have to pay like $100 per transaction to do anything with it? Like, because the blockchain ain't super hot looking right now. Like, they're not clearing the memory, the memory. Bitcoin memory pool. Okay. It's not crazy or anything like that. It's not crazy or anything like that, but they're not clearing the transactions out. Like, do you see that? Let's come back 4 days. Okay, wow. Has it really been that bad for that long? I'm surprised that nobody's been talking about this. And geez. Okay, so there's kind of these spots. They haven't cleared out the transaction, the memory pool in like a month. So you realize that what this means right here is all of these people, these are all transactions. So there are transactions essentially that have been placed in here that have been waiting to get processed since January 1st. And they're saying, I'm only willing to pay this much to be transacted. Right? And you got all of this corporate adoption, and I'm like, okay, but you realize that in order for your transaction to be processed in a reasonable time, you've basically got to put yourself up in here. And even then, it could be a day or two. Like, that's a problem. That's a problem. And Ethereum has this problem too. So here, let's come to Ethereum. Ooh. Lots of unconfirmed transactions over the past 3 months. It's getting pretty bad over there in Ethereum. Now, when you come down in here, it tells you what the transaction fee is. So 2,000 Gwei is like the highest. Or no, what are we getting? It's as high as 250 Gwei. Okay. Now, let's look at Bitcoin Cash. Oh, look. Bitcoin Cash. They'll process a lot of transactions. It'll get pretty big, but then because the block size is larger, they process all of the transactions and it goes back down. So if you wanted to use it as an actual payment system, it will continue to be cheap. So here again, I'm like, you guys are all betting on a speculative run based on something that is objectively untrue. You can't use Bitcoin for transactions in your business. You end up paying too high of a transaction fee. They've intentionally made it so that you can't use it. They want you to hold it. So like, oh, what? You know, it's just, what is it? One thing you want to do for future improvement in your training? Well, right now I have a bunch of ideas and we're backtesting them. So I backtested something yesterday. Hold on. Okay, we're like 44 viewers. I think we're okay, but don't tell it. Shh. Don't tell anybody what I'm about to tell you. Okay, it's top secret information. So I did some testing on a moving average versus a directional. Well, actually, we'll just bring it up. Hold on a second. And close of 0 is greater than okay. So this right here is with directional change, and then I'm going to change it to a moving average. We'll hear the big sound. Prepare yourself. There we go. Okay. That's with bull. Oh, you know what? I did it wrong. Hold on a second. When you have both of them, only 33. That's interesting. That's interesting. Now that is also interesting. So this one right here, 11,000 is using directional movement. And this one right here is using a moving average. If you use a higher moving average, it's a little bit better, but then you kill more trades. What if I try going against the moving average? What if I trade against the moving average? Okay. So it's a little bit better, but it's still like half as much. So that is one thing that I have changed that I'm looking at, is that it appears to me they're using directional movement, essentially the zigzag indicator, appears to do better than a moving average. Now, there are some things about the zigzag because it like redraws and things like that. But my understanding, like going back through the code and everything, the way that it is doing it should be, or the test that I'm using should be consistent to back testing. So, yeah. The market does what Elon wants. It might seem like that in the short term, but Elon will have to exit his trades at some point too, right? Imagine this for a second. There's a recession. There's a recession triggered by asset inflation. Okay, so Elon Musk's stock price tumbles like 50 to 80% or something like that, okay? In order to raise cash, they have to sell off assets. So they sell Bitcoin, causing the Bitcoin market to go down. Selling the Bitcoin causes the price of Bitcoin to decrease. The price of Bitcoin decreasing causes the price of Tesla to decrease because people were buying Tesla because they had Bitcoin in it. Which means that they have to sell more Bitcoin, which makes the price of Bitcoin go down, which makes the price of Tesla go down, which means they have to sell more Bitcoin. You see this cycle that's going on here? There is an execution cost to your trades, and there is an execution cost to buying or selling. So Elon Musk buying alone, when he buys it, yeah, the market will go up and people will follow him. And when he sells it, the market will go down and people will follow him too. And in net, without anything else coming in, he will lose money in net on that transaction, unless there's a reason for that thing to become more valuable, like that it actually does get used more and becomes more valuable overall. But this is why I start going into all of these things, like you can't actually use it for transactions because you're flooding the memory pool, right? So yeah, this is a fallacy that retail traders fall into, is that they think that the big guy has complete control over the market and that all you do is follow that big guy and then you'll make money. And then that's when you run into this issue that, yes, but the big guy also has to sell. And when he sells, it's going to go down more than when he bought it, unless there was like a piece of news, unless he had a real edge. He knew that something was coming that was going to make it be worth more. And then whether you make money or not is entirely dependent on how early you got in and out. And most of y'all's, to be frank, too slow. Too slow. These robots follow these. You're going to be faster than the robot? That's hard to make money from doing it. So you can do it, but generally speaking, I would not recommend it. And one of the things is that most retail traders, the vast majority of retail day traders, are basically, that's the thesis behind their strategy. And so there you go. The whole thesis behind their strategy is not true. There's a serious issue with it. So we are asking, what are those block buys? Yeah, so if it says block buy, then it was in the treasury. So there was a 3,000 lot buy at 25.5. And then they pushed him back down. Oh, that's interesting. So somebody tried to clear him, but they're actually, that liquidity at 25.5 is for real, apparently. Okay, so the E-mini is back to the seller's cost basis. I come back and I look at this. Jay has been doing pretty okay today, but Joseph and Brandon not so much. Cycles are what matter regardless of high frequency trading, hedgers, etc. Okay, so what kind of empirical... so I just presented my case, which was that you can't just follow people. And I presented my empirical evidence for that. What empirical evidence do you have to back up the assertion that you just made? I just called the top within a tick. Okay, so one trade, one time is not empirical evidence. If you can show me over the course of 3 years, all of your trades and, you know, how those calls turned out, that would maybe be empirical evidence. 2 days is not proof of anything. Dude, this kind of shit boggles my mind. I'm sorry, AGOE. I mean, maybe you're like really being genuine here, but I personally, I don't think you are. What kind of... anybody that has been trading in this market and is really as good as you are claiming to be would know that 2 days worth of data is bullshit and that nobody would care about that and wouldn't even bother going in and saying, well, because I made it this one time, I must be right. Or these 2 times, or like even freaking a month. Like, dude, I can show you months that I've had where I literally never made a losing trade. It was like practically 95% win rate. And my winners were larger than my losers. So it wasn't even that you were taking on excessive risk. Okay. So yeah, it makes me a little mad because you're telling people that 2 trades counts as empirical evidence or proof of something. No, it's not. And if you were anywhere near as good as you claim to be, you would know that that's not the case and you wouldn't make that kind of an assertion. 3 years, I say 3 years right now, because you got like that. Normally it would be like 2 years and you got it, but now we've had this whole pandemic for the years. So I need to see, like, how did you trade in 2018, 2019, and 2020? Just show me 3 years worth of statements, and then I would be like, okay, maybe he has a technical edge there. And then we'd have to be able to look at the stats on it to be able to say, okay, like how big of a stop is he using and things like that. Like, is the risk actually appropriate for other people to use? Is it actually like, can you actually duplicate it? No, usually not. But that's kind of the thing, is that usually when people do find an edge, it's usually because they're doing things that other people can't do because of their risks tolerance or whatever. Maybe define. Well, yeah, that's another thing, is that what he's saying about what is a cycle seems kind of awfully vague. Nope, I'm sorry. You know what you sound like to me? You sound like a bullshit guru trying to come out and use my channel to promote yourself by thinking that if you come in and you say, oh, I made these 2 trades that they were really good, that my audience is stupid enough to fall for that and go for it. But if you look at my audience, we come in, it's the same group of people every day. These are people that have been doing it for years. They know that 2 trades means jack squat, and they don't fall for that sort of stuff. And I think that they're all just sitting here laughing at you, that think if you think that is like empirical evidence to prove the assertion that you just made. Because that's what I'm doing in my head. I think it's fucking hilarious. How long have you even been trading? You, to even think that would be a thing, like, you must have like just barely started or something. Like, I just... Scott says facts. A says it just got back. Who are we calling out? We're calling out AGOGE trading. AGOGE trading says that the only thing that matters is cycles. What did he say? Cycles are what matters regardless of high frequency trading, hedgers, etc. And then I asked him, what empirical evidence does he have? And he says, I just called the top within a tick. Okay. He thinks that 1 or 2 trades is empirical evidence. And it's effing hilarious. I believe you are amazing. Where do I send my money? You know, the thing that's so funny about this is that when Ace came in and started doing that, he was like, well, okay, that's okay if you don't believe me. I will show you my broker statements. And he did. And then he said, I will come in and I will just show you, I will tell you the exact spot that I'm taking it and you can watch it. And I did. And you know what? Like, it doesn't work all the time. Like there are some issues with the pure strategy, and I really wish I understood how he manages it as well as he does, because he never falls victim to the big pitfalls for some reason. Or at least he doesn't tell us about it. but he's been in here consistently for well over almost 2 years now. We're getting on, and he makes good calls every day. And then somebody else comes in and they say, oh, these 2 trades that I called, come on. Who do you take me for? Maybe that's what makes me mad about it. Do you think that that's what makes me mad about it? Is that I'm sitting here and I'm like, you know what? I've been watching markets since 2008. I worked for a large firm for 6 years. I've been trading futures now for 4 years. I do a tremendous amount of backtesting strategies. I talk to a ton of people and they show me their results. And so I know like what kind of results are typical and what a good month looks like and a bad month looks like. And, you know, the inconsistency of things and all of this. And then somebody comes in and they think that they can take advantage of me like any other stupid retail trader that's only been trading for a week and thinks that there's just some guru that's going to give them the signal and then they're going to be profitable. That is it. That's what makes me mad about it. Who do you take me for? Dude, we've been doing this for years. You're not going to fool me with that kind of bullshit. I should stop. I mean, I don't think it's fun anymore. Are you enjoying? Do you want me to continue? Are you enjoying? Are you enjoying the rant? What do you think? They're going to open. So the open was exactly at 3,900, by the way. So they're going to touch the open now. But Seth's added again. Put your helmets on. Oh, man. And after all that, we were rocking and rolling. Nobody said it was easy. Yeah, exactly. You know, a live action is a great example here, because a live action, I think he's been around almost from the beginning. And he's shown me a little bit about his strategy too. I wasn't enough that I could like back test it. And he hasn't shown me statements, but he's still here. Are you not entertained? You're only as good as your last call. There you go. Yeah. But I mean, that's the listen, if you're trying to promote yourself, buddy, let me give you some advice. Don't make a big deal about every trade. Because if you start making a big deal about it like that, 2 things happen to you. Number 1, you'll only be as good as your last trade. So eventually you're going to screw up badly enough that people go like, oh, like maybe I'm not going to watch him anymore. That kind of happens anyways, even if you try to avoid it, but whatever. And the second thing that's going to happen is you're going to outsize your impact from people trying to follow you. And it will make your strategies unprofitable. Simply by pushing that kind of thing, it's going to make your strategy unprofitable. But people have called me crazy for years to be like, you know, is it like the market fighting me? It's like it worked before, and now all of a sudden it doesn't work, and it's bad every time. And it's like there's got to be a reason for it, and this and that. But no, my understanding of the market now is that, yeah, if I tell you too much about what I'm doing and why I do it, it ruins it. Especially if it's a super tiny edge. I'm back. I went full ADHD thinking about how to build an atomic. You probably shouldn't say that online. There's probably that your NSA agent is probably going crazy. Oh, actually, you know what? I found out the other day. Well, I knew this, but I forgot about it. It's so crazy how they take advantage of your attention, and like there'll be a big news story and you're like, oh yeah, like this is a big thing and here's all the implications of it and everything. And then the news story isn't in the news anymore. And then you kind of forget about it and you forget about the implications and all of that other stuff. Oh, I'm sure they love my Unitarians. Yes. But there probably are people spying on you, but it's not the US government. Actually, what it is the Canadian government spies on you, and then the Canadian government sells that information to the United States. So your agent is up in Canada somewhere probably, or in Europe watching you. I feel bad for whoever it is that is forced to watch our stream for, radical extremism or whatever. Whatever it is. That explains my long-term Canadian. Which, by the way, where is Botspin? I've been wanting to show him something. Oh, well. What's up with AMP? Their margin page is down and still have increased the margin link from last. Really? Really? I mean, I looked at it the other day and it was... Now it seems... You mean this page? If I just come in, trading info, margins, you come in here and it just tells you the standard margins. You can trade a micro contract for $40. Don't know, $1,000. The difference in the maintenance versus the day trade margin for E-minis seems irresponsible, don't you think? That was funny. Have to watch Seth's stream and nonstop Weather Channel. I'm sure the FBI agent who monitors this trading room kills himself every 3 months and they have to bring in someone else. Oh, as that explains it. Sure. Man. Okay, so we're saying like there's going to be a tendency, maybe if 50 is a big price, to stick around it, but nah, I'm not going to say that like at 47, that doesn't mean that they can't come back to it or anything, but so far that trend has continued through. There was a little bit of an attempt right there, but it did not last long at all, did it? Edge clear maintenance is at 18K. I kind of look at some of them and I'm like, why do they let you day trade that if the overnight margin is $1,000 and they let you trade it for 40? You probably shouldn't be trading it. That goes, remember when I was saying the other day was like with the combine? So it was like, how was everybody not blowing up their combine every day trading the E-mini? I guess back then the S&P 500 didn't move nearly as much as it does now, huh? You really kind of have to wonder what the futures space would be like today if they hadn't have made the micro contracts. Maintenance is like how much money you really should have in there if you think about it. Well, yeah. I mean, the way that they calculate the maintenance margin is that the possible overnight gap that you can get. So I don't think that it needs to be that high for day trade, but I just kind of question the disparity between them, you know? Like, it's really easy to lose $40 trading micros, you know? Like when I think about it, okay, like in the 10-year, I think that the ratio in the 10-year is okay. If I get a 16 tick move, if I get like a half a point, and that's a big move in the E-mini, or sorry, in the 10-year. If I get a big move in the 10-year and I'm able to catch the whole thing, then it's equal to the margin for one contract. Okay. Whereas in the ES, it's like actually a typical day move could be equal to your margin. It's way over leveraged, isn't it? Seth, they must have been updating. It wasn't up over the weekend. Oh, okay. You know, it's kind of funny thinking back on it, because we were talking about AMP the other day. When all of the futures brokers back during the pandemic increased the margin for everybody. And I remember, because a lot of you guys just weren't trading it, which is really what you should have been doing. I think that we played it right. We just stayed out. But AMP were the first ones to increase it, weren't they? How is it doing now? It's at 47. What do you think they're going to close at today on GameStop? So here's let's game this out. I think let's say we have to pick an exact number. Okay, so you give me two numbers. I think that it could close today at, well, it's 9:19. Oh, this is so tough. This is so tough. Okay, I'm going to say that I think GameStop could close today at 45, and I think that it could open tomorrow at 20. Sure, it could open tomorrow at 20. 42. Here, I'm gonna open up my thing. I'm gonna open up my notepad. Here's the predictions from last time. What I need to do is I need to make a prediction robot. That's what we need. Yeah, we'll do it over here. Okay, so for me, Seth, 45, 20. $155.40. What, you think that's today or tomorrow? Wait, you guys say 42, huh? Okay, well, that's for closing today. So Terrence is 42. Blunt, well put at 42. Conboy says 50, so he thinks it's going to recover. Even 40 is doable. You're just saying 42 because you want it to be 420, huh? Yeah, okay. And Keller said 155. Every time I see it, there's a family in my neighborhood that has that name. So every time I see your name, I think about that. Well, okay, but what about tomorrow? What do you think it opens at tomorrow? Oh, you didn't even think about the 420 when you told me that? Do you live in Utah? I'm pretty sure that you would know. If you live in my neighborhood and you don't know me, you're not paying attention, or you haven't been going to church. No, it's Pennsylvania, okay. Here in Utah. Here in Utah, it's especially in Davis County. It's like 85, 70 to 85% of the people all go to the same church. So they know who's who. Does your neighbor walk around in a robe and a shirt? No. I don't do that. Maybe some other weird things that the neighbors complain about. You know what my neighbor... one of my neighbors, I think, is like not the neighbor, but one of the kids is like Wiccan or something. Because the other day they were out doing like a harvest ritual or something. And my wife was like, she's from Texas. She was concerned about it. She was concerned. It's like, it's just the teenagers being rebellious and doing dumb things. It don't matter. It doesn't do anything. Whew. Should I try and zoom in a little bit more on this? Nah, let's just be in. Let's just be zoomed in. Nah, like that. Yeah. Because that thing is just getting creamed. Oh, so she's the one. No. No. Oh my gosh. Start worrying if they start sacrificing local pets. Oh man, that would... Oh my... Wait a second. Is that what happened to my chickens? Maybe it wasn't a raccoon after all. No. I totally forgot about the chicken thing. We built a thing for our chickens, and then we left like a teeny tiny little hole on the roof that we didn't notice, and something crawled in and killed all the chickens. Not all the chickens, but like 3 out of 6. Which means that we get to have baby chicks this year, which will be fun. I hope. Well, he says the loan. I do accept Dogecoin. Oh, okay. Oh man. I'm surprised he stayed. I was like, I really reeled into him here, man. Produce stats. Dodge is cheap, yeah. Hey, listen, the garlic coin, man. You have to think about it. It's like, we could do Dodge. We could do garlic coin, but I mean, here at 2 cents, man, just a week ago it was under 1 cent. 2 cents seems awfully expensive, doesn't it? There's some real momentum in that thing. Up 25% today. Oh man. I don't know what I'm gonna do with myself if garlic coin ever actually goes to where I think it will. It'll be the ultimate irony. It'll be the ultimate irony that we spend all of this time learning about markets and futures trading, and then we just get lucky on a shit coin. Don't you think? Any coins you have your eyes on lately? I'm garlic coin. I have to be clear, like, I own garlic coin. I don't want anybody to be like, oh, you didn't tell us that you owned it already. I own garlic coin, okay? I own enough garlic coin that I'm not going to tell you how much of it I own. I'm so mad I sold my 100,000K. Oh man. Well, that could have been $50,000. Yeah, it's okay. Something that's not garlic coin. Well, so the thing is that I haven't really been watching the small coins very much, because when it was the last time around, the small coins that I was really interested in, like they did their things and it kind of looked like they're already over. Like Siacoin is a really good example. Siacoin was something I thought was going really, really well. And I made a bundle on Siacoin too, by the way. It came up, I recognized that it was overvalued compared to, based on mining and my my model and all of that stuff. And I got out almost to the hour of the top on Siacoin. And then I was like, it came back down. I'm like, okay, well, we can buy it back later. And I left. I held some of it. And then the whole thing came out about like they wanted to make an ASIC, but somebody beat them to it and all of that stuff. Really screwed that coin over, man. Oh my gosh. You know, so it was kind of like that with that one. Verge. You know, I haven't looked at Verge in a while. Let's look at Verge. Coin market cap. XVG. So the thing that is interesting about Verge is that it was carrying out a significant number of transactions compared to, you know, everything else. Okay, so you can see Verge is kind of taking off a little bit, but here again, it was like, okay, so it took off in 2018, and that was because Pornhub, right? And then that was the top. It kind of died down. And is it going to go and make a new high? I don't know, because a lot of, you know, these small coins, they never do that. So I was also interested. Let's grow Tesla coin. What's that doing? Is that maybe a little more consistent? That's one that I would maybe have expected would have held up a little better. Oh, hey, yeah, that's a little bit better. It's a little bit better. Grow Tesla coin is another one that I kind of felt like was undervalued. And the thing that's interesting about Grow Tesla coin is that you mine it, but it's like more efficient. So like you spend the time mining, but not the processing power mining. I don't know how it works, to be honest with you, but it's supposed to be more environmentally conscious. So I thought that that one was worth going into. But now there's all this. It's like what's popular right now. When we come back to coin market cap. Let's see here. Cardano, that's the one that's IBM's, right? So that one is always going to be. That one's always going to be up there. XRP just got that one's done for. I'm surprised Litecoin has fallen down the list. Or no, the Stellar is the IBM one. So maybe Stellar would be worth getting into. I still like Bitcoin Cash, although I don't know where they're at right now. 504. It's not bad. But my understanding is that it's these ones. Oh, DAI is interesting. It's always been interesting too to me. But the ones that I'm hearing about the most are the DeFi coins. So I think that the whole idea behind DeFi, which is essentially they don't want you to sell it, they want you to just hold it, and they'll pay you to hold it and stuff. I think is kind of dumb, but the idea of doing a contract and like giving people, other people interest and stuff like that, that's cool. So, and those coins seem to have been taking off. So I suppose if we were going to do like a balanced portfolio, we would maybe have to consider a DeFi coin in there. But, well, actually, you know, that's the other interesting thing about it is that I look at Bitcoin and I'm like, I don't want to be involved in the Bitcoin market. But then I look at the cycle and like, no, you don't want to be involved in Bitcoin. But now is like the time to be like loading up on shit coins and then hoping you get the ones that take off, you know? So, But that's where I'm like, you know what though, if you want like a shit coin that gives you like a crazy risk reward, I don't know what the probability of it is that it actually takes off, and there's some issues that you need more exchanges, you need more economic activity on that chain. But I think that Garlic Coin is a good candidate because you start getting the momentum on it, and they still have this huge subreddit. And the reach that they have on Reddit and everything else like that, if Garlic Coin would ever pick up, it's going to go nutso. And because it has such a low supply, the potential prices that they could value it at, if momentum came into it, is pretty crazy. Like, we're literally talking about something that's 2 cents right now and could be worth $100. Not saying that's what's going to happen. I hope it happens, though. Hope it happens. Why is it now, I'm thinking in terms of the business cycle, that it's all of a sudden taking off, though? Like, obviously Elon and Snoop and all, but why right now? Why not 2 years ago when I had it? Well, so there's kind of a cycle. So the first thing is that you kind of need to have a halvening. So when the halvening comes along, it reduces the amount of new supply coming into it, and therefore makes it even more deflationary. And then you kind of run into like this support area. So like there's this area down at the bottom where just people mining the coin and regular use of the blockchain and the people that develop it and stuff like that will support the price. And that's when you want to buy. Now, this last time around, they didn't quite get down there. The thing is that there was like a speculative bubble kind of coming in before the pandemic, and then they just got absolutely trounced on the pandemic. And then because of inflation and everything else, they're like, they're going again. Now, of course, if something happens with Tether, that's going to all fall apart really quickly, but for now, they believe that it's a hedge against inflation. So, whatever. Is it safe to say? I don't think that GameStop is over until after market close today. So, there's the big report today. My understanding is that we don't get that number until after the market closes. So, at 2 o'clock today, we find out how many shorts there are still in the market. If that number says 20,000, then it's over. If that number says 60,000, then this thing is just going to skyrocket right back up. Personally, though, I believe that it's going to say 20 and that it's over. How much will you make off it in Garlic Coin? More than I should tell you. Lots of money in lots of pockets needs to go somewhere with no interest being paid in banks. Yeah, you're right. The issue that I have with it, like, here's the thing is, if they were taking it in Bitcoin and then they were actually using it, then it would be great. But what they're doing is they're just speculating with it. So, yeah, you have a bunch of money that has to go somewhere. But what people aren't considering is, and then what? You're going to get this inflation. You're going to have these people put all of their stuff in. And then at some point, you're going to get the recession. And those assets are going to get hammered so hard. The people that made a ton of money on Bitcoin or whatever else it is, they're just going to lose it all. Like, this is what happens in every Bitcoin cycle. So 80% of the people lose. So I remember, I mean, man, with this channel started in 2017, And I didn't start streaming until the Bitcoin futures went live. And I remember talking about this all the time. Everybody was like, yeah, get in. Like, it's going to keep going up anyways. And then I was like, yeah, but when it crashes, are you going to be able to get out? And we know the stats, 20% survive. And the people that I knew that I was speaking with and trusted the model and got out, survived. I had one guy tell me that he saved $100,000 the 2017 crash because of our model. And another one that said they saved, I think, $50,000 from the 2018 one. Yeah, this is just like the stats of it. Dodge is definitely still in its monthly trend, right? It seems like that bottom diagonal falls apart, the uptrend will remain, right? You know, so like that's the thing, is that because of the supply, the way that the supply in Dogecoin works. So like what you're thinking is like, oh, we can get this, and then we get the little triangle, and you go up again like Bitcoin does, right? But the issue here is that in Bitcoin, the number of coins that are coming out, it increases, but here it happens. So now it's going like this. And eventually it'll just be flat. It'll be like this, right? And so that's why Bitcoin is able to continue to do that. Dogecoin, on the other hand, is just doing this all the time. So what happens is you get this and it come back down. And so if we come back over here and we look at it again, coinmarketcap.com, Dogecoin. Okay, so look at, so there's the price in Bitcoin. Okay, there's you'll see that like you get these peaks where the market cap gets to a certain point, but then it'll come completely back, and it doesn't like maintain its market cap. Whereas one like Bitcoin, Bitcoin is able to maintain its market cap and increase it. So with a coin like Dogecoin, when you see this and it's come back a little bit, bail, it's over. You were probably late. And you know why this happens right here? Because that's everybody trying to beat each other out. So be sure to be the one that's out up here. And that's why we have the model, is because the model gets you out. Like if I draw it in black here, so you can see it a little bit better. The model tends to get you out right about here. It tends to get you out just a tad early. But this past run in particular, it seems like they're doing something different. So typically it'd be like this. There's usually a relief rally, right? Today it has done this. So I don't know what it does now. But I've never seen it spike like that above my level. It's always been, it'll get there and then it'll die out and it'll come back down. And they're playing like, we're just going to come back again. So I don't know. It's different. It's different behavior, which we should expect. But I still think that it means that crash inevitable. Slow market's pissing me off. Yeah, we really got to bring in our risk, right? Although that bounce off of the lows there was pretty good. Oh, by the way, it's 9:41. Well, What can we put in today's video, man? Is the title. I tell you what, if today's slow market is making you frustrated, wait 6 months, man. Because it'll either be way slower or way more volatile. We could put something about GameStop. I don't know. That's just, I feel like it's like a... yep. I don't want to say like slow day. Market awaits GME short interest data. That's what I'm going to put. Because that's going to be the day that I'm going to remember this by, is the day that the short interest was released. Okay. Biden killed, well, it's not just that. It was like this after Donald Trump was elected too. Like, you get his first 50 days, and then after that, it's like all of the volatility from the new policies is baked in, and then like it just goes dead. And because they are printing so much money, it really kills volatility. You got to understand, the amount of money that they're printing right now kills volatility. It makes it good for in people that are holding for long periods of time, but it can be really frustrating for anybody that's trying to do a trend following strategy. That's why I keep like warning people that it's like it's gonna seem like you just make money every day as a day trader, over the past year, going back to March, April of last year, but the volatility could die down. And then, if we get the VIX below 20 again, it's going to be really tough. And you're going to have a really range-bound market. And you have to use mean reversion strategies. So, all right, guys, I really got to go. I will catch you tomorrow. Stay profitable, friends.